Hello, and welcome to the Blueprint for Hotel Investing Masterclass, curated by Elise Capital and the Vonne Group. We have designed this masterclass to show you that hotel ownership is attainable as a vehicle creating generational wealth. We want you to feel inspired and empowered as we lay out the process to achieve ownership. Now, let us just warn you, this session will be a lot of information, so we hope you have your notebooks ready. On this masterclass, we'll take you through an industry update, lay out the industry fundamentals, and give you a glimpse of the hotel ownership process, including how to acquire assets and where to find capital. By the end of the webinar, we hope you have a taste for ownership and want to learn more. Now, typically, investment courses span about 12 to 20 weeks in program length. However, this session and the entire Blueprint Hotel Investing educational platform that's backed by Elise Capital and the Vonne Group are designed to give a high-level education to our interested investors on how to reach ownership. So I'm your host, Kendra Plummer, the founding partner of Elise Capital, which is a hotel-focused real estate investment and advisory firm creating pathways for women and minorities in hotel investing. Over the past 10 years, I've specialized in hotel operations, asset management, and acquisitions. And throughout my entire career, I've managed transactions of over $5 billion in commercial real estate assets, from the sourcing of the deal to closing and the entire negotiations process. So to truly value a deal, you must underwrite it and analyze it from a financial perspective, which is what we'll go through as an area of my expertise in this session. Now, let me introduce you to my co-host, Davonne Reaves of the Vonne Group.
Hello, everyone. My name is Davonne Reaves, your pathway to hotel ownership expert. I am the founder and president of the Vonne Group. I have over 14 years of experience in the hospitality industry. That includes operations, asset management, feasibility studies, and development consulting. Throughout my time in the hospitality industry, I've managed over $1 billion in assets. I'm also the co-author of Tidbits for the Emerging Pineapple Professionals, which is the guide for aspiring hospitality professionals. And I'm also the co-founder of Epic Collective. It's a commercial real estate fund for folks like yourself who wants to invest in hotels. Now, before we get into the meat and potatoes of how to actually acquire a hotel, invest in a hotel, or even raise capital for a hotel, we want to start with going over the hotel fundamentals. So typical industry structure, you start off with the franchisor, which is typically the brand, Marriott, Hyatt, Hilton, IHG, Choice, just to name a few. And what, as an owner, you're signing a contract or a franchise agreement with the franchisor to actually use their brand to put on your hotel. And then as an owner, you can either be owner operated, which we'll get into a little bit later, really more in the detail into our courses, but you own the hotel. But for the folks who actually manage the day-to-day operations, that is what we call an operator or a management company. So you have the franchisor first at the top, meaning the brands. And then you have the owner, who's the franchisee, and they're actually franchising the operation or the brand from the franchisor. And then you have the operator, who's managing the hotel or day-to-day operations on behalf of the owner. So there are so many types of hotels, but for the purposes of this masterclass, we're just going to go over the three types of hotels. So you have limited select service hotels, means it's limited or no food and beverage options. And for a typical guest, to give you an idea, it's a family business traveler, and when they say hotels, they're not looking for a lot of amenities. They're focused more on cost and how much the rate is going to be at the hotel. So just to give you an example of what a limited or select service hotel would be either Holiday Inn Express, Courtyard by Marriott, or Hampton Inn by Hilton. Extended stay are typically a week or more. An example would be Town Place Suites by Marriott, Homewood Suites by Hilton. And this particular guest, they're staying, like I said, a week or more, even sometimes up to a year, and it's a home away from home. So in extended stays, it has a kitchen, It's an oversized suite, kitchenette, and you can actually, cook food. It's typically near like a Walmart or Target or some type of shopping center. That way they can shop and get all the things that they need, and also has a washer and dryer on site for those long stays. A full service hotel typically has 3-meal restaurants, meaning they offer breakfast, lunch, and dinner. They have a concierge, and they also offer full amenities such as a spa. To give you an example would be Marriott Marquis, Hilton Hotel, Hyatt Regency, Four Seasons. All of those are full service hotels, meaning they offer all of the amenities. But as first time hotel owners, we definitely recommend that you look into investing or owning limited service hotels, limited or select service hotels. And the reasons why it's so that way you won't have as much overhead, dealing with all of the amenities. And not only that, we really want you to understand the hotel business. Key performance indicators, or KPI. So the 3 KPIs that you see on your screen are something that you're going to hear throughout the hotel industry. Occupancy, average daily rate, and RevPAR. Occupancy is the percentage of your hotel on an occupied basis, meaning if your hotel is at 50% occupancy, that means it's 50% full. Average daily rate, it's just the average rental income. And so hotels, they have so many different rates. That includes discounted rates, that includes military rates, ARP, rack rates, and all those get averaged in, and that give you the average rate. RevPAR stands for revenue per available room, and it's just an indicator of how healthy your hotel is performing. And to calculate the RevPAR, you just multiply the occupancy times average daily rate. Acquisition team. This is what I specialize in. It is so important into having a team or dream team. Asset manager, you want to start off with the asset manager or a hotel consultant, somebody who has experience in working with hotels. And the reason why, because hotels are definitely, it's a different business. It doesn't matter how many multifamily projects you own, how many rental properties you own. If you never owned a hotel or worked in a hotel, it is definitely a complicated commercial real estate. It's an operating business, so it's different. So you really want someone to understand how it operates. So first you want to meet with a consultant or hotel asset manager to help you develop your acquisition team. And I'll go through why it's so important. You want to have a hotel lawyer. You may have the best closing attorney ever on your team, but if that closing attorney has never closed on the hotel and they don't understand hotel operating agreements or franchise agreements, that may not be the best person to put on your acquisition team, because you want someone who understands the hotel lingo and also understands hotel legal terms. Typically, your hotel consultant or asset manager will understand the business terms, but you really want a lawyer who will understand how it works. I'll give you an example. If you have a management contract with an operator, and you're in your negotiating phase, you really want that lawyer to have your best interest in heart, because it's best to, even if you have to put out a little money in the beginning, it's better than have to put out a lot of money in the end, having to renegotiate your contract. Hotel broker. A hotel broker ensures that the hotel closes successfully. Again, you want to work with someone who has experience in hotels. You actually may be the best broker in the world. You may know someone who's the best real estate broker in the world, but if they have yet to close on a hotel or work in a hotel specifically, they may not be the best person for your first deal. You may want to bring them on later on, but on your first deal, you really want someone who really understands it, because you're new to it. A brand, as I mentioned before, it's the franchisor. You want to find the best brand that's good for your market, that's good for what you're trying to do. And so you want to make sure that you get the right brand on board. Operator, as I mentioned before, is a management company or a third-party company, and they manage the day-to-day operations.
So now that you have an understanding of the structure of the hotel industry, let's dive into what the industry actually looks like today. So there are over 55,000 hotels in the United States, and these include all of the different types of hotels that Davonne just mentioned, as well as some that we did not mention, such as boutique hotels or hotels that do not have the full brand, but are maybe soft branded, like an Autograph Collection by Marriott. So all types of hotels are included in this number with a total of 55,000. Now, believe it or not, only 2% of US hotels are Black owned. So according to research from NABHOOD, which is the National Association of Black Hotel Owners, Operators, and Developers, only 2% of hotels that they have found are Black owned in the United States. So a lot of this discrepancy is due to systems that lack educational exposure, as well as lack of access to opportunity. So with Elise Capital and the Vonne Group, we're here to bridge that gap for you. Now, becoming a hotel owner is not an overnight transaction, okay? It's a journey. In our final section of this session, we'll explore the blueprint to hotel ownership. So before we fully dive in, what are the benefits of becoming a hotel owner? Hotel investments have unique benefits in comparison to the big four commercial real estate assets that you'll typically see. Those assets such as industrial, retail, multifamily, and office. Hotels both are an operating company and a real estate asset. So this means that you get to collect the cash flows from the net operating income of the business end, and then also collect the capital gains and property appreciation. So hotels also offer nightly leases, which is different from, again, your commercial real estate assets that you traditionally see. So traditionally, most people are familiar with multifamily or office, which typically have a monthly or an annual lease. With hotels, we have more dynamic pricing, which is why we have the average daily rate that, again, was mentioned previously. So with these nightly leases, you're able to have a good revenue management system in place that will target and identify when demand is high. You're able to raise the rates in that high season. And when demand is low, maybe you drop your rate a little bit just to edge out that competition and get your occupancy up. So it gives you more control on a daily basis for how you price your property, which of course results in a more control on the revenue streams coming in. Hotels also provide 1 in 25 jobs in the United States. So becoming a hotel owner allows you to help the surrounding community in providing job opportunities which positively impact the unemployment rate. And lastly, the high returns. So while hotels certainly have a lot of risk associated with them because of how demand oftentimes fluctuates, they also have some of the highest returns, which often return back 1.5 to even 3 times your amount invested. The most important part, of course, of becoming a hotel owner is having the money to do so. Many people assume that ownership is for the rich 1%, but there's actually many ways that you're able to tap into cash you may not have even considered to use before. So while many people use their personal savings, there are options to use a 401k or a self-directed IRA, and even some get equity loans. There's a lot of different ways to access capital. And through this process, you need to be creative and open-minded for how you'll be able to get the cash to purchase your property. So hotel ownership is based on cooperative economics, meaning that it takes a group or multiple players to achieve the goal. So the two types of investors are active and passive investors. An active investor typically means you're the one sourcing the hotel deal, evaluating it, and taking the full lead and management of the entire investment. So when you're an active investor, you have more responsibility. A passive investor simply means that you're investing your money into the deal and really just letting your money work for you by collecting the monthly cash flows and, of course, the big return at the end of the hold cycle. So typically, ways to be a passive investor are maybe you invest in a crowd fund, you might invest in a private investment, which would be something like an investment fund, which the Vonne Group as well as Elise Capital both have available, as well as real estate investment trusts, or also known as REITs. These are similar to buying stocks, And sponsorship or syndicate is when you're the active investor, which means you're finding the deal and doing every single step of the process. So no matter the path chosen, you should understand the entire process of hotel investing. Remember, it's a process and not a journey and not an overnight transaction, so it is a full journey. The blueprint to ownership consists of 7 phases. So first, you define your investment thesis. Then your second point is to find your deal. Thirdly, you complete the due diligence. Fourth is entity formation. 5, raise capital. And 6 is to acquire ownership. At stage 7, this is when you have the asset in your control and complete asset management and eventually revert the property. Now, today's masterclass will take the high level approach, but to really get the full picture, we encourage you to take our full course in the Hotel Ownership School.
Investment thesis. This is literally the first step into understanding how to invest or how to own a hotel. The first thing that you want to do, the first stage in your investment thesis, is you want to determine your investment goals. And actually, there are 2 ways that you could think about it. As Kendra just mentioned, you could think about your investment goals as being a passive investor, meaning you really just want somebody to manage the asset on your behalf. You don't really have a say so. You're just looking for the sponsor or the active investor to manage on your behalf. And so that's a goal that you want to think about. How do you want that to be set up? Do you want to be a passive or do you want to be an active? Another way that you could think about as far as determining your investment goals, if you start off as a passive investor, to really learn and understand the hotel business. And then maybe after 3 years as a passive investor, you decided that you really learned a lot, you feel comfortable, you understand how to raise capital, and now you want to become an active investor. So now your investment strategy has changed. And as an active investor, as far as determining your investment goals, where do you see yourself in the long run? Do you see yourself owning a hotel for 3 to 5 years? Do you want to focus more on value add hotels? Do you want to focus more on building a portfolio? You want to start off with 1 hotel and then eventually go to 10 to 15 hotels. So all that is a part of your investment goals. And I definitely recommend that you work with a hotel consultant like myself or Kendra, or anyone who specializes in hotels to kind of help you and work with you developing your asset management plan and determining your investment goals. And the second stage of determining your investment thesis is finding out your hotel type. And that means, what type of hotel do you want to invest in? I talked about this before as far as the different asset hotel types. Would you like to invest in limited service? Would you like to invest extended stay? Would you like to start off in full service? So those are some of the things that you want to think about as far as determining your hotel type. Your hotel size. Do you want to go with the boutique size hotel, meaning less than 50 rooms, or do you want to go all the way to 200 rooms or even more to 1,600 rooms? We definitely recommend that you start off small and you start off with the limited and select service hotel. So that way you can really get a true understanding of what the hotel process looks like in understanding the business. Management structure. Definitely recommend that you work with the CPA or lawyer and the lawyer to really help you understand how you want to structure your management, meaning forming your entity. Do you want it to be an LLC? Some of the things that you want to think about when forming your management structure, especially if you're an active investor. How do you want to structure the process? Because you're going to be working with investors under you. Class sector, stage 5. Which type of hotel or class would you like to work with? There's so many different classes, upper upscale, economy scale. There's so many different classes within the hotel industry, and that's something that you want to look into and determine which would be best for you. Investor market. This is trying to figure out which investor would be best for you. If you want to work with accredited investors or non-accredited investors. Accredited investors are investors who typically have a net worth that are classified as accredited investors, typically have $1 million in net worth, or they make $200,000 a year. That's as a single person. As a couple person, they bring in $300,000 a year and a net worth of $2 million, excluding their primary residency. So these are some of the things that you want to think about. Who would you like your target investor to be? Do you want to work with more of high net worth individuals, or do you want to work with non-accredited individuals who are not classified as high net worth? So the top 3 things to make a hotel successful: location, brand, and operator. So far, we've literally been taking you step by step to getting you closer and closer to your pathway to ownership. Just talked about the investment thesis as far as the first things apart in the blueprint to hotel ownership. But really, what makes a hotel successful after you determine your investment thesis? Finding the right location, finding the right brand, and finding the right operator. Location, location, location. It is so important. So you need to determine the market and where you want your hotel to be. Do you want it in an urban area? Do you want it in a rural area? Do you want it near a school? Do you want it near major demand generators like a school? Do you want it near the beach? Do you want it near the mountains, near a ski resort? All of those things are so important. So once you determine your location, now you need to determine your brand. Do you want it to be Marriott because their mission aligns more in what you're trying to do? Do you want it to be a Hyatt because there are not any Hyatts in that market and you feel that you'll be able to capture more of the rate share or market share because you have a Hyatt, because you have a different brand and you're attracting a new type of audience? Operator, who is managing your property on a day-to-day basis? You want to pick out a manager who has experience in that market, who has experience with that brand. It is so important. I'll give you an example. Had a client of mine, had 2 out of the 3, had a great location, had a great brand, but did not have a great operator. And because they did not have a great operator, they were leaving money on the table, meaning they were not getting their fair share of the market. They were not getting the right occupancy. They were not getting the right rate because that operator did not understand the market and they did not understand the brand. Therefore, they did not understand how to target the right guests to get that guest in the hotel. So it's so important that you have those 3 things that make your hotel successful. So we talked about all this information and I'm sure you're like, oh my goodness, what can I do to find a deal? I'm ready. I have my investment thesis. I found my asset manager, but I really want to find a deal too. So your asset manager should be helping you with this. But if you can't wait, you can go through a hotel broker. A hotel broker can help you find the right hotel for you. Again, you want to work with the broker who has experience in hotels. It is so important because they really understand how to underwrite the hotel. They can make recommendations and they can also refer you to the right people, even the right people to help you with your team. If you just happen to go to a broker first, they can recommend you to an asset manager. They can recommend a lawyer for you because again, they're constantly doing this. They're constantly working with the hotels. So they have a lot of people in their network. Websites. You can go to loopnet.com. You can also go to 10X, which is an auction website. Those are 2 great websites to look for hotels. There is an MLS for hotels for my folks who are in residential, but those 2 websites are really good for you to get your start into finding the right hotels. Relationships, people in your network. If you know any other hotel owners or if you know people in the hotel industry, just reach out to them and just let them know like, hey, I want to buy a hotel. Do you know anyone who's willing to sell?
So once you've identified a deal you're interested in, you have to evaluate it to make sure that it truly is a smart investment that will achieve your investment goals in returning cash. So we're not just out here buying hotels because we want to stay in them and because we like the property. Our purpose here is to generate generational wealth and have a smart and sound investment vehicle. So as mentioned previously, hotels are a high risk, high yield asset, which means they do have risk to them, but the returns are usually worth the risk. When investing, you want to make sure that there's stability for your hotel to reach those high returns to create cash flows for your wealth generation. In the numerous times I've led ownership acquisition processes for various investment firms and transactions, the most important stage is the investment analysis, which is also my expertise. So, what goes into underwriting a deal? The underwriting process consists of three analytical steps: the market analysis, financial analysis, and feasibility analysis. A market analysis takes a deep look into the supply and demand of the area your hotel is located in. So, in this step, the community surrounding the property is heavily researched, looking into new supply, stable demand generators, or even new demand generators that could make an impact on hotel performance. So, for example, let's say you're in the Atlanta area buying a property and you really like this hotel. It might be a Residence Inn that was built in 2005. If something that directly competes with that brand, such as a Homewood or another extended stay property, is currently in the pipeline to be built in maybe a 1 mile radius, you'll have some hard competition competing with a newer brand that's doing the exact same thing. So you want to look into new hotel supply and see what's coming around in the market. If there's a lot of new hotels coming about, then you might not want to invest in that property anymore because it's going to be hard to compete and they might actually end up taking all of your market share that you typically had, even if you historically had high occupancy. Stable demand generators just mean why are people coming to that hotel? This goes back again to Davonne's point about location. So aside from just the hotel itself, what else is bringing people to this area? Is there maybe a university nearby? Is there an office park with a lot of big businesses where people are traveling? Maybe it's even at an airport. In the market analysis stage, you should be really looking into the surrounding area. We always suggest driving the area or even going on Google Maps to just see what's around there in order to analyze your market. The second analysis is the financial analysis, and this involves a financial model which projects the research found in the market analysis to then turn it into a financial forecast, which gets used to predict the financial performance in a profit and loss format for the operating hotel side of the business, and then in an investment returns analysis to consider the real estate value add and capital gains. So the financial analysis helps to gauge the potential return on your investment. Because of the risk taken on in this asset, the financial analysis is extremely important and should have various scenarios, which include both a max return or a good scenario, as well as a conservative return analysis, or considering what would happen if the markets weren't doing what you thought they normally would and something extreme happened. In addition to using this analysis to determine if your deal will generate the cash flows you're looking for from your investment thesis, this analysis is also important in sending to your lender for them to determine if an asset is what they would want to give a loan on and also how much that loan should be. So because this analysis is used both for the investor and the lender, it's imperative that it's done with a valuation expert like myself or another investment analyst who specializes in hotels and can develop these models for more realistic projections. So to really put the importance of strong underwriting into a real life example, let's say a broker tells you that the purchase price they're shooting for is 20 million. A lot of people take this number as fixed and don't even look into the true value. For one of my clients, the brokerage price was significantly higher than the actual value. It was just a seller picking a number, and they wanted with no actual backing to it. This is just what they thought they deserved from having the hotel. We were able to negotiate that price down because it wasn't actually realistic. And the hotel wouldn't have generated what they needed it to. So because we were able to negotiate the price down, This then raised the return for their investment because they no longer had to put in a huge amount of equity in comparison to the loan that was given, because the loan to value is going to be based on what the lender thinks the property is worth, not the seller. So it's really important that you do your own valuation to make sure that you're either on the same page with what the seller wants for the property, or it gives you the leverage to be able to negotiate the price down. The combination of the market analysis and the financial analysis creates the feasibility analysis. So with the completed feasibility analysis, you should be able to determine if the deal you're looking at is, one, in a good market, and two, has the potential to yield the returns you're looking for. So if the answer to both of these is yes, then yay, your deal is feasible and you can move on to the next stage. And that next stage is submitting an LOI. So once your deal is proved to be feasible, it's finally time to make that offer. An offer of intent to buy is completed when the seller receives your letter of intent, also known as LOI. Submitting a letter of intent does not guarantee that you will own the hotel, but its purpose is to outline your proposed commitment if you complete the hotel's transaction with the seller. An LOI typically includes your offer amount as well as a timeline of a due diligence period prior to agreeing to the formal purchase and sale agreement if that seller accepts and agrees to your bid. Now, on the journey, the groundwork you complete in stages 1 and 2 really set the framework for the stages to follow. So the due diligence stage is purposed to confirm that the asset you're bidding on is really what you think it is. So the broker may have told you that it's, this amazing asset in great condition, but you want to do your due diligence to make sure it truly is as everything that you thought it was going to be. You don't want to be purchasing a hotel, especially for this large investment, and find out that you have to end up putting more money into it because you didn't do your actual due diligence. Your LOI will outline the amount of days you have to complete your due diligence and confirm that before you enter into the purchase and sale agreement. So typically this process is about 30 to 45 days. Although in the previous stages, you completed a market analysis, a financial analysis, and a feasibility analysis, you want to go back again on a deeper level and make sure that those numbers and that projections that you came up with truly are achievable after doing your full due diligence. The environmental analysis is required, and it's used to determine the impact your land may have on the property and environment. So for example, if there were hazardous materials found in the ground that are below your hotel, and this could potentially be a health threat both for your hotel employees as well as your guests, this would likely be found in this environmental analysis stage. And again, all of this due diligence is to protect yourself from buying something that is going to be more of a liability than an asset. The property condition report tells us the physical condition of the property. So if there are any issues in the property, such as the elevator being out of compliance or electrical issues, this will be addressed in this report. This is also a great report because it's going to really lay out the timing for how long things in the building will last and how you're able to better do your renovation budget to really see there might have been something small in the hotel that could cost a couple thousand, and that would impact your renovation. So when you go back and you revise that renovation budget, that of course has an impact on your investment returns, which may have you considering to either lower your investment price and renegotiate that, or back away from the deal if it really isn't right for you after doing your due diligence.
So now you pretty much figured out your investment thesis. You determined your location, you working with the broker. And at this point, you really want to form your entity. You want to find out which investment structure is the best for you. You can do some preliminary work by, speaking with a lawyer who has experience in structures, meaning securities or syndication. You definitely want to work with the CPA, a certified public accountant, to make sure that you are forming the right entity or the best entity for what you are trying to do when owning your hotel or even raising capital. The reason why this is so important, because you want to make sure that you're protected. So you want to make sure that there are contracts in place, especially when you're working with other investors, or if you're doing a capital raise and you're bringing investors, to certain agreements that you need to have in place. And if this is your first time doing it, you want to make sure you're doing it right, especially if you're doing something, if you're doing any work with the SEC, you just want to make sure that you're in compliance with everything, that you're doing when it comes to raising capital. So we suggest when you're forming your entity to work with a lawyer and a CPA, because you probably don't even know the type of entity that you want to form. Raising capital. You all have been waiting the entire presentation, I'm sure. How can I raise capital? Yes, this is important. Hotels are a capital intensive investment, and you do need a lot of money to invest in hotels. But there are some creative ways as far as how you can raise capital. You can raise it from investors. You can use regulated crowdfunding platforms to raise capital. If you put your particular project on the crowdfunding platform, as for real estate or for hotels, you can raise capital that way. It can be timely. So you do, again, want to work with a CPA and a lawyer to kind of understand the timing and if it's aligned with your due diligence process when it's time to raise capital for you to close on your transaction. Personal relationships, reaching out to you, that means reaching out to your family and friends. You can pull your money together, meaning group economics, or collaborative economics, meaning working together to pull your money together. You may not have, $500,000 in cash, or it may need to close the deal, but you may know 5 people with 100. You can break it down where you can come together and you can bring all of that capital in one place. Retirement accounts, self-directed IRAs, home equity lines of credit. There's so many different and creative ways as far as how you can raise capital to close on your hotel. We actually talk about this in our online investment school. We definitely check us out. We have the information in the notes if you're looking for ways on how you can raise capital. Closing next steps. So you finalize financing, meaning you pretty much finalize raising capital. You're crossing your I's, you're dotting your T's with your lender on what you need to do to get to closing. You're working with the management company, meaning you pretty much are negotiating your contract. You're finalizing that process. You have your lawyer reviewing and finalizing the legal terms. You have your asset manager or your hotel consultant managing and reviewing the business terms to make sure that you are protected as a hotel owner, to make sure that the management company is doing what they're supposed to do as an operator. Because again, it is so important in this process when you're negotiating the terms to make sure that the management company is doing what they're supposed to do for your best interest, because they're going to do everything according to the management agreement. So that's why I mentioned before why it's important to have a hotel lawyer and a hotel expert. For example, I had a client who was working with a management company. They contacted this management company before they engaged me. When I reviewed the terms were unfavorable to the hotel owner, meaning there was a stipulation in a performance clause. And basically, in a nutshell, the management company was saying that we are going to do subpar work and you're still going to pay us 3% of your revenues. Well, as the owner, that's not right. You don't want subpar work. You want to be the best. You want to be number one. You want to get as much market share or share of the market as much as you possibly can. And so after reviewing the terms, I definitely recommend it to look at other management companies. I've also suggested other management companies that will be the best fit for their hotel. Remember, location, brand, and operator. They had 2 out of 3. They had a great location, they had a great brand, but they were not about to get the best operator because they were basically saying, we're going to do subpar work in their performance clause. And you have to go by what's in the management agreement, because if they're saying that they're going to do bare minimum, that's what they're going to do, and you can't fight it and you can't cancel it. So you want to validate and establish vending, meaning who's going to get the sheets, who's going to get the towels. All of that is a part of the transition plan. And as far as getting you to closing, relationships, talking to the other hotel owners, talking to the other management companies in the area to really understand the market, letting them know that you're a new hotel owner. One thing about hospitality, we are very friendly. We're all about healthy competition. So don't feel as though that you're a hotel owner and you can't talk to the other hotel owners. They'll be very glad and very open to talk to you. Same thing with the different management companies. Developing a transition plan is very important, because I guess if they check in to a hotel on June 30th, and they should not know that it's been a new ownership change on July 1st. So it's important to work with all the different people on your team to make sure that the transition plan is smooth and successful.
So as we've learned through this session, there are many ways to acquire a hotel, and we hope you've been able to soak in the blueprint. As a passive investor, having this blueprint allows you to have the knowledge to quickly glance at an opportunity and know the framework for if it makes sense for you. So this blueprint is not only for active investors or the sponsor, it's also for passive investors, because you want to know, especially in the due diligence piece and the underwriting piece, if you're getting the correct returns that your deal person is talking to you about. So while this session is a high-level view, it is not the end to your education. We encourage you to get deeper into the framework by participating in our educational courses on the various components to the acquisition journey. So again, thank you for joining Elise Capital and the Vonne Group, and congratulations on taking a step towards hotel ownership. Please feel free to reach out to us with any further questions or follow-up. Our contact information will be in the notes.